Hi, welcome back. You're with Chartbusters. Good going for the market. So let's speak about some stocks which are in focus. The merger of Dalmia Bharat with OCL India has been approved by the management. Remember, OCL India was a subsidiary of the company. Puneet Dalmia, the MD of Dalmia Bharat Group, now joins in. Hi, Puneet. Thanks very much for joining in. To begin with, can you take us through what's the rationale behind this merger? And also, if you could tell us what's the timeline for this deal as you see it?
Sure. So the rationale behind this merger is to create a single listed entity in the group and also simplification and consolidation of our corporate structure. In the last 3 to 4 years, Dalmia Bharat has rapidly built scale and size, and we grew organically as well as inorganically, and we had committed to the markets that we will create a simple structure at the appropriate time, and we did this very seriously in the last 1 year, where we simplified the holding by swapping KKR into the listed company almost a year ago, and now we are merging the two companies, Dalmia Bharat and OCL, which will create a single listed entity and also simplify the holding structure and consolidate all cement assets into one operating company, which will be 25 million tons in size.
All right.
In terms of the timelines, this will require shareholder approvals and regulatory approvals. So I think this will take about 5 to 6 months.
All right, Mr. Dalmia. So congratulations, first of all. I remember the company being a 2 million ton company. Today we're talking about 25 million tons. So fair bit of growth is what you're seeing, organic, inorganic as well. So congratulations on that front. But moving on then, there would definitely be some synergy benefits that we could look at. Could you tell us how does this make things look? Operationally, what kind of gains do you see? In terms of taxes as well, is there any kind of benefit that will come because of this merger?
Sure. So I think this will definitely help us extract more synergies more quickly. We clearly see a reduction in administrative costs and SG&A. We also see that all brands will now be held by one company, and therefore we can basically leverage different brands which are at different price points in various markets more efficiently. So clearly this will create more synergies in terms of reduced admin overheads, more synergies in branding, as well as increased synergies in logistics. So even though OCL has become a subsidiary about a year ago, we are in the process of extracting those synergies, but this will just accelerate the whole synergy extraction process and make it more faster.
All right, Mr. Dalmia, then you must be working with some numbers. You know, I was just looking at your EBITDA per ton for OCL as well as Dalmia Bharat. Both of them, they're working between around maybe 1150 to around 1250 rupees on an EBITDA per ton basis. You're talking about a lot of synergies that are coming in. So maybe in the next couple of years, what is the targeted EBITDA per ton for this consolidated entity? 25 million tons.
So I think we don't have any guidance as of now for a firm number, because there are lots of macro variables which will impact this. One, clearly petcoke prices and fuel prices are going up, which is a negative. However, we think GST will be a huge positive for the sector. We expect that net tax rates might be lower than what it is today. And further, it will allow seamless movements of goods across states, and that is likely to reduce logistics costs. So I think there are macro variables at play which are going to be fairly significant in size. But on the operating side, I personally think the synergies could translate into 50 to 100 bips in terms of extra margins.
All right.
Okay.
But it's too early to give a firm number as we are still continuing to work on it.
Okay, fair enough. Correct me if I'm wrong, but I think Dalmia has a debt of around 7,000 odd crores, while OCL is net cash positive. So could you tell us what the consolidated balance sheet may look like?
Sure. Our consolidated net debt will be somewhere around 5,000 crores at the end of March 17, and we expect our net debt to EBITDA to be below 3. We also think that overall, we have laid the foundation for a strong upcycle, and we are fully prepared to leverage the benefits of the upcycle. We have laid a very strong foundation in the last few years, and we think that we are fully prepared and geared up for the upcycle. We are currently running at only 58% capacity utilization, and as demand picks up and as volume ramps up, the profitability is likely to substantially improve. So we feel that the best for the company is yet to come, and we are fully prepared, and we have laid the foundation for leveraging the best possible upside in the coming few years, which we expect to be very healthy as India grows, and builds infrastructure, and builds smart cities and builds roads across the country.
All right, Mr. Dalmia, you've been doing very well. The stock as well has been on fire. Both OCL as well as Dalmia Bharat, both of them are done maybe 150 to around 200% just from the February lows. Now, you're saying you've geared up for, more demand to come in, etc. You have moved from around 1.5 million tons to 25 million tons in the last 10 years. What's the outlook for the next 5 years? Is there some inorganic growth? Is there organic growth? What's the target? Fourth largest cement company already. Going ahead, are you looking to give the top three a run for their money?
In terms of our future plans, I think our first commitment is to Mother Nature. We are already the greenest cement company on the planet, and we want to continue to be extremely sensitive about our responsibility and our commitment towards sustainability. Our second commitment is to be a leading, most profitable player in the sector, and I think we want to realize this through a low cost and premium brand strategy. And thirdly, in terms of size, I think our immediate priority is to sweat the existing assets. As I told you, we are running at 58% capacity utilization. And our immediate priority is to scale up volumes. But if you look at the next 5 years, I think there will be scope for further inorganic and organic expansion based on the balance sheet and based on the cycle. However, I can only say that, we have been extremely aggressive in terms of building scale in the last few years, and this is the time right now for us to consolidate. And we want to pause right now to make sure that we consolidate everything that we've achieved, we lay a very strong foundation, we make a very solid company, and then we will further look at a rapid expansion in the next 5-7 years.
All right, Mr. Dalmia, that before you go, you need to give us a couple of details. Then, how's the pricing scenario that's playing out? I think you're predominantly in the south as well as the east part of the country. So, how's the pricing looking out there? And if in case in the next 5 years you're going to be looking at some inorganic growth, then which part of the country will you be looking at? Will you stick to your core areas, that's the east, the northeast, as well as the south, or do you think you're going to be moving to other parts of the country?
I think we have concentration in 3 regions right now, as you said, south, east and northeast. And we will continue to further strengthen our position in places where we have already made significant investments. But ultimately the plan is to build a pan-India footprint. And our presence in north and central India is weak, but we have mining leases there, and there is scope for organic growth. And if there are inorganic opportunities that present themselves, we will definitely take a closer look at them. So I think the ultimate goal is to build a pan-India footprint with organic as well as inorganic growth, but without losing the focus on the regions that we have already invested in. In terms of prices, I think second quarter was a little weak because of monsoons, but there is a seasonality effect. However, we have seen very good rains, and we think that the demand should start picking up in the coming quarters. And as demand picks up, usually pricing also firms up. And if we see the seasonality, the second half of the year has better prices than the second quarter. So I'm hoping that we have good times ahead in the sector. And, we are very happy that we have positioned ourselves very well to take advantage of the good times as and when they arrive.
All right, Mr. Dalmia, before you go, I'll have to quiz you on this one. Are you talking to any cement company? I've been in touch with a lot of cement companies in the south. There are quite a few that are on the block in the east as well. As of now, is Dalmia Bharat talking to any company as of now?
I'm sure you don't expect an answer to that.
No, I don't expect the name, sir, but in case you could say whether you're talking or not talking to them.
No, I don't think I can answer any question on that, but I can only say that right now we are totally focused on consolidating our existing presence, and we are focused on sweating our existing assets.
All right, Mr. Dalmia, always a pleasure talking to you. Been a big wealth creator for the last so many years for so many shareholders. All the best going ahead as well. I've seen the company, Sumera, from around 2 million tons to around 25 million tons in the last 5 years. I remember at one point of time I should cover it as a small cap, then a mid cap. And now, in fact, it's one of the largest caps. And the management as well sounds pretty confident going ahead. The stock is higher in trade. Dalmia Bharat, OCL India as well has had a good run. And that stock has come off the high point of the day. But there is a bit of an arbitrage play because of that ratio, 2:1. Both the stocks doing quite well.
And meanwhile, JLR has released its global sales. So they've actually seen